Episode 2, Season 5, Unlocking Silicon Valley. No need to clap. Although, I'll tell you what. If you've closed a deal in 2026, you can clap. Ben, why are you clapping?
Pending.
Hey. E-A-G-L-E-S.
Welcome back, Aaron.
Welcome back, Aaron.
Bay Area real estate market on fire. Philadelphia, everything is terrible.
Yeah, do you want to give us 30 or 60 seconds on your trip to Philadelphia?
Interesting place. Can't say I would recommend going.
Mm-hmm.
Cool little historic buildings, decent food, terrible people, respectfully.
Decent food.
Decent food. I'm out on the city as a whole. Wouldn't go back. 10 of 10.
Give us one positive about it.
The Niners won.
Niners won.
Was the food any good?
I like the layout of the stadium. All three stadiums are together. So Flyers, Eagles, and Phillies all play in one parking lot, which is pretty neat.
That's cool.
That is pretty cool. But
I
other than
appreciate
that-
how much culture people have. Like, even if you're not going to the game, everyone wears like an Eagles jersey.
Yeah.
Unfortunately.
So the passion's there.
The passion's there. The people are respectfully very rude and terrible across the board.
Did you see Rocky Balboa?
I did go to the statue. I tried to feel something. I didn't feel anything. We were specifically instructed as Niner fans not to touch the statue this year after our loss 2 years ago. So it was interesting. It's cool. It makes me grateful for being
Here in the Bay
here
Area.
in the Bay Area. Good weather. It was 16 degrees when we were at the game.
Yeah, that's cool.
Yuck.
Yeah.
You won't get 16 degrees in Silicon Valley.
But whatever you hear about Philadelphia Eagles fans is true, and then add a little extra.
Yeah, nice. Well, we're glad you made it back in one piece. Let's jump right into stats. We talked last week. We're, obviously at, yearly lows for inventory. It's creeped up a little bit. 389 single-family homes in Santa Clara County and 425 condos and townhomes. We're selling about half that many are pending, and there is a ton of property coming on the market in the next 30 to 60 days. I know just on our coming soon MLS, we have about 350 as a group of real estate agents, but also as our team alone. I mean, we have at least 20 or so listings coming on in the next 30 days. So I think it's going to be a great year in terms of volume and number of transactions. I think it's going to be, continue to be a great opportunity for buyers and sellers. What do you guys think?
One thing that I would add that keeps coming up is if you are searching or seeking a higher value, the real estate market didn't really heat up in September, October. They were kind of lulls, and then it really started cranking out November, December. I think we all felt it. Mm-hmm. If you need a certain value, something that's higher, generally speaking, real estate is a lagging indicator, right? So if you are looking for a $2 million value, you're probably going to see that number closer to like February, March, April, because what's selling now is not going to post for 30 days. Same with headlines, things like that. But if you want a lower value, like I can't exactly get into all the specifics, but then I would say hurry up and jump and either buy that house now, or you're going to end up paying more later.
Yeah, and I think that's sound logic, but I will say, and I want to ask you guys this too, I don't think we're going to get some crazy appreciation bump this year.
I do.
Right? You think more than 3 to 5%?
I think we're going to end the year at 13%.
13% increase in median value.
Mm-hmm. Single family.
Yeah. Single family. Okay. What do you guys think?
This year we ended up at what, 1?
Yeah, it was nothing. It's pretty flat for the year.
Yeah, I mean, last year was a roller coaster, right? We saw a crazy increase in the first 3 months of the year last year, and then after the tariff announcement, it kind of just died down and flattened over the winter. I think we're going to see a similar curve, and then winter would be something that we'll see how it goes. But I think the first half of the year will be pretty robust. I'm already seeing a lot of buyers back in the market, getting a lot more. We've been thinking about buying over winter, didn't really see much out there. Now we're starting to see more inventory come up, so now's the right time, and we have leases expiring April, May, so on and so forth. I think buyer confidence is starting to trickle back in.
What's your final projection?
I think we're going to end the year with about 6-7% appreciation.
I was going to say 5 or 6 too. I think I think the first few months, and just from doing like the couple recent open houses, once the interest rates came down a little bit, the headline came out, buyers just got wind of it. I think they get more trigger happy or feel like this confidence level come over them, just a little more steady. I see it surging in the beginning. I see interest rates flatlining or staying as is for the most part of the year. So I think once everything comes back down, like in that summertime, I think we'll stay pretty stagnant until the rest of the year.
of today, we're a 3-year low for rates. I saw.
Yeah,
like
it's a hair under
5.99.
6%, right? And I was just going to say to Aaron's point earlier, lagging indicators, right? So people are now saying, wow, rates are in the fives, even if it's high fives. And hey, I noticed my gas prices are coming down, eggs are coming down. It's all those little things that kind of add up mentally. And then those buyers come back out in the market January, February. They close March, April, resets the price for the spring, summer. And so I don't think we're going to get, would you say 13%? I mean, that'd be great for our clients, but I think ultimately, I'm 5 to 8% kind of in that range, and probably closer to 5 than 8, because I still think there's some rebounding to do from last year.
Hey, agreed. I think, you guys kind of said it. 6, 7
with 13.
Thank you for clarifying.
No.
Pressure. Honestly, I think 6, 7%. I think
you can't say 6, 7.
Okay, I'll say
Leave that in 2025.
let's go high. We'll go 8%.
All right, thank you.
8%,
But not 13.
but not 13.
Aaron's hoping 13 because he bought a house and he's hoping to get an extra 13% on the exit value.
He's putting it out there now.
He put it into the universe. Yeah. All right, I know you had something you wanted to share, and then I'll go to my my Zillow topic.
Yeah. So article I think everyone was aware of last week. Just wanted to kind of go over that, maybe shed some light. I think there was some confusion with it. So Trump announced a plan to block large institutional institutional investors from purchasing single-family homes. Mm-hmm. So I think you hear that, you kind of get like, everyone gets all stirred up, like, okay, what is this going to mean? Mm-hmm. This and that. So kind of break down, first off, what's an institution? That's any sort of REIT, which is a real estate investment trust, any kind of private equity firm, any kind of pension fund, Blackstone, BlackRock, or insurance companies, basically coming in, and everyone thinks they're going to gobble up all these single-family houses, and no, there's not going to be any for the rest of us. Yep. Looking at some data, currently, those institutions that I just read off own less than 1% of the single-family inventory in the entire country. Mm-hmm. So I don't think they're coming in, and we're really going to have like a ton of competition. Purpose kind of behind it is what he's talking about is exactly that, reducing competition from large corporations, so your normal American family can come in and buy a house. So I just to kind of shed some light on my thoughts, I don't really see that kind of happening, and then B, the real reason why people are having a hard time with affordability or housing is what we've already all talked about: lack of supply, high interest rate, and then high cost to actually build. So I think the main factors in the affordability thing is that just lack of inventory, lack of supply. David just went over stats for us, so I don't really see that being a huge factor.
Yeah, and I agree, right? It sounds like a great headline for all those people struggling to buy a house and thinking that the man is outbidding them. But I mean, it's pretty much non-existent in our market. It's more prevalent in the Midwest, where the price point's lower. And some unintended consequences of that. If you have those large institutional investors buying up a bunch of single family homes, sure, it helps stabilize price, but what it also does is it creates a rental market for people that want to rent single family homes versus, apartments or condos or something like that. So you remove that entirely, and then, that may make the rental market, hotter, right? Make rents go up because there's less rental inventory available. The other interesting thing about that, like you mentioned, large institutional investors only make up less than 1%. However, last year, almost a third of all real estate transactions nationwide were purchased by investors. Majority, 90% of those are mom and pop investors, right? Just buying their first or second investment home. But, it's really interesting, great headline, large institutional investors. But the reality is it's the mom and pop investors doing what our grandparents did back in the 50s and 60s, and is building wealth through investing in real estate.
And respectfully, non-politically, you just have to kind of look at who's saying it. Who has built a massive fortune through real estate and whose family owns
a ton of real estate.
A ton of real estate besides just hotels? Mm-hmm. The Trump.
Yeah, this is also like, and it's actually come back around again. I just saw in the news this morning, the 50-year mortgage. they're really pushing that. We've talked about it on the podcast, how, not only does it change the payment very little, but it adds a tremendous amount of interest. And I don't think it's going to, open this big, bridge to home ownership for people, but they are pushing that. And then the last thing, and I didn't bring a lot of information on it regarding Trump, is that they want Fannie and Freddie to buy mortgage-backed securities, buy mortgages again. That could potentially have a positive effect on interest rates, right? I mean, Ben, you mentioned earlier you didn't think rates are going to change much this year. I actually think we'll probably end the year where the average rate's about 5.5%, and maybe even a little lower, 5 3/8.
Here's one thing that we haven't really talked about is 2019, 2020, 2021 rates were what?
2.5.
2.5,
3,
3.5,
4.5.
They certainly weren't 5, right?
Right.
So generally speaking, we can say interest rates changes your payment roughly about 10%, right? So going from 5 to 4, 10% difference monthly payment, right? So many people back then took 5/1 ARMs, 7/1 ARMs, and guess what? It's 2026. A lot of those things are coming due, and unfortunately, it's changing people's payment enough to not be able to keep it or make sense to be able to keep that property any longer. So I do think that we're going to see more inventory from things like that than we're maybe even expecting.
I agree.
And this is where I completely disagree with you guys on that.
Okay.
And let me explain why. Because I was a mortgage broker for 10 years, in addition to being a real estate agent for a long time. Those adjustable rate mortgages, you're absolutely right. There's a bunch that are resetting in the next couple of years. However, if you look at the fine print on those adjustables, there's a max that they can adjust during the first period, right? And typically it is 0.5 to 1%. Now, it may increase their payment by 10%. And so for a small fraction of people, it may move the needle to get them to sell.
So
Go ahead.
on 100 loans, how many do you think say that?
Every single
All
one.
of them.
Every
Really?
single,
Yeah.
every
So you're
single-
saying if you're at 3, let's use a round number, 3%,
It will only
and
jump to
today we're at 6%,
it'll jump to 4.
it will not go to 6.
It cannot.
And how should a consumer find that information?
They should reach out to me and I'll explain the note to them. So every adjustable rate mortgage is tied to index plus margin. That's how they calculate the adjustable rate. The fixed rate that they gave you, that teaser rate for 3 years, 5 years, it is what it is. After that, it's based on the margin. Usually the margin for those are anywhere between 1 to 2%. And then the index that it's tied to, and those are volatile, right? Those can swing up 0.5 point, a point, in a month or every 3 months. But there is a max cap on the initial rate adjustment, and usually the max is 1% per year.
Hey, credit given where credit's due. I had 10 years in, had no idea. Been approached by like 4 or 5 people. I'm like, oh yeah, it's terrible. Like, let's sell your house.
Now, just
Isn't there-
pull the note.
Isn't there,
Really?
when you read the interest rate too, when it's like a 3/1 adjustable, there's a certain word like adjustable something afterwards that signifies how
Yes, that's what I'm talking about. It's that initial adjustment period, right?
yeah.
So where it varies, some of them are written max increase of 1% for the first year or the first 2 years, and then variable after that. But yeah, there's everybody said, oh, there's this huge wave of all these people. Mark has a 5 or a 7 year ARM on his house, right? Interest only. But when it adjusts, it's only going to adjust up a point. So he's going to go from 2.65 to 3.65. So most of those loans are still going to be below current market rates,
But
at
they
least for the
also-
first year or two.
They also changed the period of how often it adjusts. So it used to be 7/1 ARM, where 7 years is a fixed rate, and then every year it would adjust by a certain amount, right? Whether it's 0.5 point or 1 point. And now they made it 7/6 ARM, which means 7 year fixed and 6 months adjustable. So
Right.
it adjusts every 6 months.
Well, and when they changed that, for the most part, was when all those banks went out of business.
Yeah.
Right? Because they're not recouping the money back fast enough when interest rates are climbing. So a lot of the newer ones, do adjust twice a year, but most of that stuff that was papered in 19, 20, 21 are all 1 year.
And if you want a better understanding for how we will probably never end up in that 2008 mortgage crisis again, a movie that I actually watched on the way to the hellhole of Philadelphia was The Big Short. It's super informative
movie.
and it's interesting. It's actually kind of sad in some parts because it did happen, right? But it does give you a really good insight as to like what really went wrong.
Yeah,
So-
and a reminder that it's once in a generation type of scenario. It's not going to happen.
Just like I don't think rates will ever go to 2% again.
No,
I don't
that's
ever
what I
think
mean,
that
yeah.
America's banks will collapse like they did from
housing.
housing.
No.
I mean,
Yeah.
they may collapse again, like we saw it for First Republic and
Silicon Valley.
Silicon
Yeah,
Valley
but
makes
even
up.
that was like kind of that ripple effect from so much low interest rate lending, right? They over leveraged themselves with low interest rates loans, and then interest
So
spiked up.
just throughout the world, there is a lot of chaos going on. Like, how do you guys think that's going to tie into real estate as a whole and like people's confidence level? Like, what do you think is going to happen?
Well, I think you have to look at our valley and then real estate as a whole. I think our valley, with the exception of a terrorist attack or tech meltdown, we're fairly insulated. You know, our market never trends like the rest of the country, maybe some of the coastal areas, but other than that, that's it. So, you know, we saw all the uncertainty with the tariffs when the new administration came in. If anything, it just paused things for a little bit and then it picked right back up.
Same with COVID.
Yeah.
Paused and then boom.
And then spiked, right? So I don't think any of the geopolitical stuff that's happening right now is going to have a direct impact on pricing or consumer confidence. It's terrorism or tech meltdown. Those are the two kind of biggest drivers. Maybe some of the immigration stuff, you know, where you've had some scares with your clients, right? But other than that, we're good.
I think there's so much change with the new administration, especially with the visa thing, that even though there's certainty now, it's just that the uncertainty of what can happen in the future is what's holding some people back.
What's crazy is I had 4 or 5 clients that were looking to buy in the first quarter of this year, all like affluent humans, good people, great jobs, not get visas renewed this year,
Yeah.
which is actually like kind of
It's
sad.
sad.
Yeah.
Like, what? I was like, what do you mean?
And also, I mean, things that we don't see here, right? Like, for example, if you're on a work visa here, you have to go back to, like, let's say you're from India, you go back to India, you have to get a stamp done over there, which allows you to come back here, stamp on your passport. And so it's called visa stamping. And that process used to be where you can go in and, you know, stay near an embassy for 3 to 5 days, get it done, come back, right? It was very simple. Getting an appointment was very easy. Now, because they have shut down many centers in the country, there's only 2 that allow for visa stamping. So the amount of people that are, you know, waiting for these appointment dates it's a bottleneck, and it's really causing a lot of issues.
There's this guy on Instagram, his name is Ride with Ian, and he started riding his bike in Europe, and his end goal is to ride his bicycle all the way to Japan. And it's so interesting to see how different countries work with getting an approval, right? Hey, you have 7 days with a visa, but he has to ride 2,000 miles, right? And it took something like 3 or 4 months just to get his visa approved for China so he can ride through to get to the next country. So it's super interesting how it works. Obviously, we hear the headlines out here about like immigration and things like that, but it's crazy.
It's crazy when you think about it. Like, I feel like Americans make a big deal when they enter a different country and they have a layover, like a missed flight. And they gotta get a visa quickly, like to like stay there for a night. Like, we're freaking out. But then it's like you have people who can't even come back to
where they were for 2-3 years, working, contributing, paying taxes.
Exactly. Yeah.
No, I mean, you know, for as much as people like to complain in our country, we are still an incredible place to live, and the freedoms that we have.
Besides Philadelphia.
I knew he was going to say that.
all the team right there.
Yeah. But no, I mean, obviously, I mean, you talked about everything that's going on in the rest of the world. I mean, we're in our little cocoon here. It's, you know, blue skies, and, you know, homes are selling for $2 million, and people aren't blinking at the price, right? So,
And I do think that it may come off that we're not grateful. I think every single person here
absolutely.
is grateful. Like, and you know, freedom is hard to come by, and you know, God bless us, our families, and don't get mad at us on YouTube, you know.
And God bless America.
God bless America. I will say this, though, not to get political, but I mean,
You have to add respectfully.
and I'm a little older, so maybe I have my perspective is a little different. I've never seen an administration do so much in 1 year. Whether you think it's good, bad, I mean, that's why they're
Legal,
illegal, whatever, you know,
Shout out,
moral,
Mom.
immoral. It's wild. I mean, it's hard to believe it's only been a year since this new administration's been in place. I mean, I can't even imagine what the next 3 years are going to look like. It's going to be wild.
What's your take on the Jerome Powell thing?
Oh, about how he got indicted?
How he came out and said that there's all this pressure from him. And,
Yeah.
I mean, I've never seen anything like that in my 32 years.
Well, yeah, it's interesting. So remember, Trump appointed him the Fed chair.
That's right.
When it was his first term, and now he can't wait to get rid of him. So, I mean, we're going to have a new Fed chair.
But I kind of respect the hell out of him for just being like, this is what's happening, this is what they're doing, and I'm not stepping down.
No, I think it's incredible. And that's, again, great thing about our country. Other countries, if he would have said that publicly, he'd disappear. Right?
Yeah.
But we live in a country where you can voice, for the most part, your opinion, or if you feel something's not right. And that's, God bless him, man. I mean, the Fed, the Federal Reserve should be completely independent and neutral. They should not be pressured by outside influences or any other branch, executive branch, judicial branch, anything.
He said something about, they want us to remodel. And I'm like, oh, jeez.
But anyway, yeah, no, I'm a big fan of his. And you know what? I mean, they may have made some mistakes in the past, but I think the path that they're set on now, I think it's, it's fairly conservative, and I think that's a good thing.
Yeah. I mean, as a dad now, I kind of look at people differently. And I think to myself, I'm like, you know what? If that was my son or daughter, I'd be stoked that they're stepping up for what they truly believe in and what they think is right, whether it's wrong, right, backwards, or sideways. Like, you're stepping up to the president of the
United
country.
States.
Yeah.
Just don't mock his dance. He get ransacked.
Yeah. No kidding.
Or his fingers.
Gee, what do you got?
I got a game for us. Would you rather? And I've got a very
This was a good segment back in the day, G.
Sure
This
beats
is
F Hail Mary.
That's what I thought we were playing. I'm like, oh man.
For sure.
So, yeah.
Unaliving Ben.
It's
Yeah.
going to be, rapid fire questions.
Perfect.
And then, no explanation, this or that kind of thing.
First thing that comes to your head.
Yeah.
You mean like the
boy.
game that I used to play?
Yeah.
Oh,
Pretty much.
creative.
Creative. Yeah. I was like, let me go back.
Ben
steal
tried
that.
it and it didn't work.
No, we switched that to mustache man. I just took the what if out. Just went.
All right, go ahead.
Would you rather a house with foundation issues or a house with a bad layout? Go, Aaron.
Foundation issues.
Layout.
Layout.
All right. A great house in a bad school district or a bad house in a great school district?
Bad house in a great school district.
Bad house
Yeah,
in
we're all
school
the same
district.
there. Bad house,
Okay.
good schools.
Modern home or traditional home?
Traditional.
Traditional.
Modern.
Modern.
Ooh, modern. Two-story or single level?
Single.
Yeah.
All our backs.
Okay.
Yeah. Meanwhile, we're all gonna live in two-story houses, but whatever. That's what we can
I'm
afford.
over here building a two-story house.
Walkable location or a bigger backyard?
Bigger backyard.
Walkable.
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 I'm old. I don't like to walk.
He wants to walk to his backyard.
Yeah, exactly. That's why Dave lives in the hills. Yeah.
Renovated or original condition?
Original.
Renovated.
Original.
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 Really?
You said renovated.
My
after.
style.
Modern.
Okay.
Original.
All right.
I like
no
to think myself.
explanations, just answers.
All right. Do you prefer twilight open houses or weekend open houses
As a guest or a host?
as a host?
Weekend.
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 Twilight, so I have my weekends free.
I'm out on weekends. I don't understand them.
All right.
Stage the house or leave it empty?
Stage.
Yeah.
Zillow Premier Agent.
Set an offer
Showcase.
deadline or no offer deadline?
Set an offer deadline.
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 Tuesday 10.
When is it? 10, you know what? That's another hot take.
David hates it.
You should never do offer deadline before noon. It is a pain in the because so what do the agents do? So the buyer's agents will be blowing up the listing agent first thing in the morning, and then they're scrambling because their clients work, right, to try to get the offer out, packaged up, and to you by 10 a.m. Horrible.
Let me tell you why I do it.
That is the Philadelphia Eagles of offer deadlines. Doing before noon.
EAGLES. Let me tell you why I do it for the last 10 years, 5 successfully. Because Tuesday at 10 means Tuesday at
1.
noonish or 1ish. And then all of a sudden, if I go noon, then I'm getting offers till 2. So I'm like, okay, Tuesday at 10. Then I instantly have leverage for the day. And then when people are calling me, first of all, as an agent, when you call, I pick up. It's an unbelievable concept. I bet you if we called 3 top agents right now, none of them answer.
We're gonna do that next week.
And that's why I do it. And I also believe Monday is too crazy. Wednesday allows for more inventory. Tuesday 10, I'm telling you it works.
Okay, and I will just say one quick thing to that, and then we'll move on. You said that Tuesday at 10 actually means Tuesday at noon, and Tuesday at noon actually means Tuesday at 2. I bet you, because 24 years of doing this,
Respectfully.
Tuesday at noon might be Tuesday at 12:30. you're doing Tuesday at 10 and you're still getting offers by noon, it's because people are trying to get everything together. You tell them noon, you'll get everything in by 12:30, 12:45.
I'm out on that as the number one agent on the team. I'm out on that.
In your mom's heart. All right, last thing I want to talk about, Zillow. Zillow, love or hate them, whatever. There's estimates, not based on fact, just on data. However, they did do a pretty interesting study, right? One of the things the sellers love to do after we list a home, after a day or two, they'll say, man, my home's a hot home on Redfin, or I've already got 1,000 views or 8 shares. Yes, sir.
My take on this for anyone listening is that
Take on what?
Yes, is when someone does that, they only tell us as the real estate agent about it when it's in their favor. Does that make sense?
They never say I only got 3 views.
No. I'm saying like when they look at the number, like, oh, my home is estimated value is 2 million, and then I'm like, oh, well, let's list it for 1.8. They're like, but it's 2 million, okay? But when it's backwards, and I'm like, let's list it for 2.2, and they see it's only 2 million, they don't say anything.
Gotcha.
Sorry, just
Okay,
had to add
but
that.
you were talking about his estimate, and we had moved on.
Oh, all right.
So
Just blurp it out then.
yeah. All right. So yeah, these estimate, like Aaron mentioned, respectfully, has less to do with fact, and you can take those numbers, do whatever you want with them. However, Zillow did do a pretty interesting study about how views, shares, and saves impact the sale of a home. So I'm just going to kind of read from this so I don't get it wrong. But Zillow went back all the way to spring of 2023 and tied views, saves, and shares directly to days on market and sales to list ratio. And so here's kind of what moves the needle. The baseline on how they defined average. Median listing goes pending in 15 days and sells for 98% of the list price. So that's just kind of the average, the median. Now, this is how benchmarks change the outcome. This is interesting. Views. If your home gets 250 views per day, it's typically pending within 7 days. If your home gets 500 views per day, frequently sells above list price. Saves. If you get 5 saves per day, usually an offer within a week. 10 saves per day, strong signal of over list price to sales price. And now shares. 10 shares per day, which is pretty huge. I don't see a lot of shares on most listings in our area.
And shares would be like me sending it to like my mom.
Because they track those too, right? So
Brother.
If you get 10 a day, usually sells in a week. If you get 20 a day, often sells above list price. So saves and shares matter way more than views. And then, obviously, like we know, the first week is the most impactful for marketing. But this was the last thing that I wanted to share because we often talk about trends that help sell homes. So the biggest premium price drivers, when they looked at all of this data going back to spring of 2023, premium price drivers, outdoor TVs, soapstone countertops, and outdoor showers. Now, this is nationwide, but I thought that was interesting. And then speed to sale. So remember, that was premium price.
That's some of the
Interesting.
outdoor shower.
We've gotten the outdoor shower comment so many times up in like the Santa Rosa, Mount Laurel area. Every person who walks in, I think, about that price point is baffled by the fact that they can't shower after they get out of their pool.
Quick side note.
329 Los Altos Drive coming in 2 weeks has an outdoor shower.
See, there you
Is
go.
that a pool?
Has
Oh, beach.
So those are the premium price drivers. Now, the speed to sale, right? Selling homes quickly, frameless showers, terrazzo flooring, and plant ledges.
I'm not familiar with terrazzo
I
flooring.
don't know how you say it.
No, what is it?
Is that the
It's a type
tile?
Yeah, it's a type of tile, right?
Yeah.
Like a travertine, maybe.
Oh, okay.
I don't know.
It's like a design.
Yeah.
So like good durability.
Yeah, apparently. I'll have to look it up. I don't know. But I just thought that was interesting because, again, this is actual data, not a zestimate or a guesstimate, but this was data. And I will tie it in all with this. Zillow Showcase, which we've talked about. We're one of less than 10% of agents in our marketplace that actually have Zillow Showcase listings. Those listings tend to get more views, saves, and shares than a regular Zillow listing. So I posted kind of what that looks like on my story over the weekend. You see 50 listings, all just red little flags, and then you see our listing, a thumbnail of the actual home, and eventually that thumbnail is going to expand to a thumbnail and a picture of the agent. So pretty cool stuff. I can send Jacob a video on that to put up there. But as always, who you work with matter. Doesn't matter who's in the White House. Create your own economy. And,
Wait, I want to tell you something.
and have a great day.
All right.